There's a building with a plaque out front. It says $445 million raised. The lights are off, the doors are locked. Nobody's coming back. That's not a one-off story. Last year alone, close to 1,000 funded companies went dark the same way. So the real question isn't did the money run out? It's where does the money actually go? And why does the size of the check end up deciding how a company dies instead of whether it does? Start with the loudest one. Builder.ai raised roughly $445 million, building what it called an AI-powered app-building platform, a company valued at over $1 billion. It told investors it made $220 million in revenue last year. The real number was closer to $55 million. And the AI doing the building was largely 700 human developers in India and Ukraine, typing the code by hand. In May of this year, a lender seized the company's remaining cash. It collapsed into insolvency, owing $85 million to Amazon and $30 million to Microsoft. Prosecutors are still investigating. Here's the part that matters more than the fraud. Follow the money before the collapse. And it wasn't flowing toward proving the business worked. It was flowing toward buying enough time and a good enough story to reach the next round. That's the actual job funding does in this system. Not prove it, just keep it going a little longer. Follow that pipe higher though, and you find where the incentive actually comes from. Venture funds don't need a portfolio of solid, profitable companies. They need one or two companies big enough to return the entire fund. According to PitchBook data, the top 10% of venture investments produce 60 to 80% of all venture returns globally. So once a company looks like it might be one of those winners, the fund keeps feeding it. Not because the business is proven, because a fund that's promised its investors 3 to 5 times their money back can't afford to bet on solid. It needs huge. The pipe was never measuring whether the business worked. It was measuring whether the story could still become one of the few that pays for everything else. And that pipe bursts in more than one place. Pandion raised $125 million shipping packages during the pandemic boom, then couldn't compete on price once the boom ended and UPS, FedEx, and Amazon were back to normal. Canoo raised over $1 billion trying to build electric vehicles at a scale it could never manufacture profitably. Lilium raised over $1 billion for flying electric aircraft that never cleared the physics and the regulations. EasyKnock raised $455 million before 24 lawsuits over how it treated homeowners caught up with it. Cushion raised $21.6 million chasing a bank fee refund market that turned out to be too small to matter. Same pipe, 5 completely different places it broke. But most funded startups don't die loud at all. According to PitchBook, roughly 55% of US startups that raised money in 2020 or 2021 still haven't exited, and haven't raised a new round either. They're not dead, they're not growing. They're just stuck. No headline, no collapse. The story simply stopped moving forward. That's the quieter, far more common version of the same mechanism. And that reservoir isn't staying full either. Go back to 2018. About 30.6% of seed-funded startups made it to a Series A within 2 years. By the 2022 group, that number had fallen to roughly 15%, cut almost in half in 4 years. Same amount of seed money going in, fewer companies making it to the next round, which means more of them end up exactly here. Not collapsed, not funded again, just stuck in the gap between rounds. The zombie building isn't an edge case. It's what the math produces more of every single year. And the scale backs it up. Carta counted 966 of its startup customers shutting down in 2024, up 25.6% from the year before. AngelList counted 364, up 56.2%. Different trackers, different numbers, same direction. And both of them say their own counts are too low. So here's the actual lesson. A big funding round was never a survival signal. It's a delay signal and a drama signal. The size of the check doesn't predict whether the story ends. It predicts how loud the ending gets, which is why that plaque out front is wrong. $445 million raised isn't what it says. It's $445 million of borrowed time. And eventually, the clock ran out. Look down the block though. Half the buildings still have their lights on. Some of them are already zombies. They just haven't been caught yet. Which one do you think is next? Subscribe and let's go find out.